Hi and welcome along to the Investor Scale podcast. Today we are joined by Myles from Modulr. Myles, welcome along. Great to have you here.
Thank you, pleasure to join you. A quick introduction perhaps?
Yes, if you want to give us an introduction to Modulr and your role at Modulr.
Yeah, so I'm Myles Stephenson, I'm the CEO and founder of the business, and Modulr, we're an embedded payments provider, so think of that as three core pillars of technology platform, regulatory permissions and access to the payment schemes, bring all of that together to integrate into platforms such as payroll, accounts payable, travel platforms, booking platforms, lending platforms, and we deliver a service as an alternative to for businesses going to their bank for payments. They come to us instead.
Right, okay. So you guys have raised quite a lot of money and a lot of investment, and we're here at Investor Scale today, so I was just keen to to get to understand your funding journey, the where you've gone, the troughs, the peaks and troughs of your journey. Can you just talk us through that?
Yeah, sure. I mean, it's been a very gradual journey. So it hasn't been a go out and raise lots of money just for the sake of it. We've done it on a multi-year basis. So the business now is 8 years old, getting on for 9 years old. So we started in late 2015. A slightly ironic story was that we, given what we do in terms of providing better access to payment systems and accounts, the thing that held us back was actually getting a bank account to put the investment money in. So that was our first challenge, in which actually delayed us about 6 months in terms of incorporating the company and being able to get going. So we would have been going in probably late summer 2015, and it was February 2016 before we could incorporate the company. So we like to remind ourselves and others of that little story. In terms of the journey, we started relatively small with myself and a venture builder, stroke family office, Blenheim Charcot, putting a small amount of money in to get going. And then they carried on funding the business to about 10.5 million through their own funds and associated funds that they had. And then we started to, through that period, get a good sense and feeling for product market fit and their confidence that it would be sensible to go out and raise further funds, and therefore started to put together our first, if you like, institutional round. Went out and raised a Series A in early 2019. Right. And that's where Frog Capital invested in the business and came on board at that point. Alongside the original investors continued to participate. And that's been a really positive thing that most of our investors through all of the funding rounds have continued to participate, including up to the Series C in April 2022. So we've been really pleased about that. We've obviously raised at different times in the market, so we've seen the peaks and maybe not quite the troughs, but different approaches, and it's been and also learning and understanding where to find the appropriate investors, building relationships, which has taken time as we've gone through the journey.
So what in total, how much money have you raised for Modulr?
So we're just over about £150 million is what we've raised in the business, which has obviously gone into building the technology, building the go-to-market, and also as a regulated business we do have a regulatory capital requirement as well, collateral requirements. So we haven't just spent all of that. We actually still do have significant reserves of cash, both in regulatory capital and also cash to fund the business as well.
So what across all those rounds of funding has been the most challenging? What did you find was the most challenging to try and get over the line, I guess?
I think the biggest thing for us was understanding the fit between different investors, and particularly through that 2017 through to 21, 22. There's clearly been a lot of interest in FinTech and tech businesses, and getting a real deep understanding of how we put together investors that would be aligned and want to work together from both an investor and board perspective, and then also people that understand financial services and FinTech. Because investing in a regulated FinTech or financial services business is very different to investing in a pure tech business, and therefore the mindset around governance and regulation is really important. So understanding who's really been through that and who really wants to do that at times was a learning experience to find out who wanted to do that.
It's interesting that I've talked to a number of companies now and a number of investors, and I often wonder about the alignment of values and the alignment of personalities, I suppose. Did you try and find that when you were looking for investment? Because obviously, successful start to the business and things were growing. I presume there was probably a few opportunities. Did you really focus in on that alignment with your values and alignment with your personality?
Yeah, absolutely. I think that's where we've been. I think to a degree fortunate in finding the right fit, and people obviously have different views, opinions, different funds have different requirements, but I think we've got a good fit of like-minded people that are around the board table and that have invested and clear on why they're investing and alignment on how they want to grow the business as well.
Because that's the thing, isn't it? Sometimes you've got a certain direction you want to grow in, or there's certain opportunities you see, and it perhaps doesn't align with the values or the vision for your investors. And I guess that must be a real challenge if you've not done your due diligence and really brought on people who align with you.
Yeah, and an example for us, when we were certainly through our Series B, Series C, there was quite a lot of push because we were certainly getting into as was shown at the conference, the raising money from funds that were in the US or further afield, and quite a lot of push for what's the international, what's the US investment plan and expansion plan. And we've been, until very recently, because we wanted to be really focused, we've been very clear on the opportunity is significant here in the UK and Europe, and therefore very focused. And some investors found that really attractive, the focus. Others were pushing for, well, what's beyond that? And then now we have started to go beyond that, and we'll be launching in the US later this year or early next year. But also wanted to be focused, and again, getting that fit between people that believe that versus people that wanted to push harder for faster expansion.
Is it a different conversation between investors in this country, perhaps even investors in Europe, and then investors in the States? Are they looking for different things in the pitch? Obviously, they're looking for a good business. But is there different ambitions? Is there different levels they're looking for in terms of the ask, in terms of what they're looking for in terms of return?
I think there's a style. There's a
style,
difference. But I don't think the fundamentals are very similar in terms of what people are looking for. Maybe subtle differences, but I think it's broadly the same. Maybe there's different levels of understanding of geographic markets and local go-to-market. But it's trying to pull that together with the industry vertical, the regulatory perspective that we have, and then also how we want to sort of build the business. Trying to bring all of that together. And different investors bring different aspects. We also, as well as pure financial investors, so venture capital firms, we also do have two corporate strategic investors as well. So we have PayPal Ventures and FIS Ventures, which is obviously a slightly different discussion around why they're investing and their purpose as a venture fund.
So, is there anything you would do slightly differently if you had this journey again, and you would maybe go in a different direction or do something differently that you would do?
I think the learnings for me are it was really the structure and approach, and applying as much rigor as you would to in your go-to-market around account management and sales leads, around how you build the relationships with investors, how you really track. When you've met people, how you go back to them, and just being really rigorous about that. And we I think to an extent we've done that well, but I think there's always room for improvement, as there is in go to market and pipeline management. But certainly that building the relationships, and there is that tension between running the business and fundraising.
Building up relationships is critically important. We heard that from Mercia and from Robert at Greenbacker. So is that something you had pulled together?
Totally agree. And we were also talking earlier about we've got examples, or in fact all of our investors we had a significant relationship with in terms of length of relationship prior to investment. So it wasn't
one day go in.
Here's the pitch deck and here's and actually put people into a process. All of our investors, we'd built up a relationship. Some to a larger degree than others, but for example, General Atlantic, who led our Series C, I think we'd met certainly 5 years prior to it, and had built the relationship gradually over a period of time. So it does. I mean, that's not significant amounts of time during that 5 years, but regularly checking in,
just checking in. Yeah, absolutely. So we're again we touched on it, we're at Invest to Scale today, so we're looking to try and help companies to grow and to, to learn from someone like yourself. So what sort of things can we do as an ecosystem, and what sort of things can some of our companies do to make sure that they can go out there and build that investor profile?
So I think there's probably two parts to it. There's having the ecosystem here in Scotland to ensure that the businesses are on a really firm foundation, and the ecosystem, you're grounded in talent and access to talent, both experienced talent, but also what we find really attractive are the universities here and the academic excellence.
Yeah.
So the universities are a great source of talent, which is really important. And I think the need to continue to build that, both locally in terms of local talent coming from the schools in Scotland, but also international talent coming in, and then how do we retain and keep that talent is absolutely critical. But then how people work as an ecosystem, so the investment in FinTech Scotland I think has been fantastic, and that creates that natural sort of ecosystem network across the FinTech businesses. So we're huge supporters and fans of that, and have tried to replicate that in the other regions that we're in as well.
Brilliant. And so what's next for Modulr then? Where do you guys go next?
Yeah, so a big sort of milestone coming up in the next few months is breaking even, and then continuing to grow. So we want to go deeper into the markets we're in, both the geographic markets and the industry verticals, and continue to build a self-sustaining, enduring company, and then that's the key for us. And then see what happens after that.
Brilliant. Well, thank you very much for your time today, Myles. That was excellent, and good to catch up.
Excellent. Thank you very much.
Thank you.